Everybody, it's Brian Shannon from alphatrends.net. Today's Friday, the 15th of November, 2019, and we had another solid week for the markets. The Russell 2000 was down slightly, as were the financials, but pretty much across the board, we were higher besides those. So let's take a look as this market continues to add to its gains. The S&P 500 closed at a new all-time high and right on the high. So, I've been hearing a lot about different reasons that we need to be cautious and I just learned on Yahoo Finance that there's a so-called Hindenburg omen here in the Nasdaq, which is supposedly a bearish event. But look at price action. There's nothing bearish about price action here. Buyers remain in control. We continue to bounce from that month-to-date volume-weighted average price once again this week, and we're above a rising 5-day moving average. The way that this market is trading higher is a beautiful pattern of higher highs and higher lows that we see one area that becomes resistance that is tested, holds a support, and these boxes continue to move higher. So the sum of the rallies is greater than the sum of the declines in an uptrend, and we're innocent till proven guilty. If we pull back even all the way down to the month-to-date volume-weighted average price at 308, I would not be concerned. We're still in a major uptrend. You look at that weekly chart, we are, getting stretched. But again, that doesn't mean that you can't continue to make higher. No one who has sold short the S&P 500 and is still holding here on the close is making money in this market. You think about it that way. It has never closed. It has never traded higher, lower than this. So, all-time highs are bullish. The Nasdaq also closed at a new all-time high with its gap higher today. I'll just clear some of this off. These are some of the levels I've been focusing on this week as, of course, that month-to-date volume-weighted average price, and that's now down at the 250-cent level. I think that's a level to keep an eye on if we see some pullback next week. But, we're getting more extended from the breakout point, and eventually we're going to see some pullback, but it's not going to be immediately damaging to this market unless it completely just falls apart, which there's nothing to indicate that it would. And again, I don't understand how a negative, this so-called Hindenburg was 3 days ago, and here we are higher. So raise your stops if you're concerned about the market. The Russell 2000, I was just on Yahoo talking about this one. We got a little distracted with a Hindenburg, but we've been in a base here all of this year, basically 144 on the downside, up to about 160 on the upside. Now, for the first time in a while, you can see we've got a rising 200-day moving average, and we broke above these little highs from the last time we were testing there. Now, over to the daily time frame, what we see is that we're creating what looks to me like a little bit of a bullish flag here, and I think that the Russell 2000 is highly likely to break out of this and head up towards those all-time highs up near 173. That's about a 10% move. It wouldn't happen immediately, of course, but the path of least resistance is clearly looking like it's higher. And at this point, a worst case stop, I think, would be below this low here, right near 157. So keep a close eye on the Russell 2000. Semiconductors continue to make higher highs and higher lows, and I've been saying, we run up, we digest, we run up, we digest. Again, higher highs and higher lows, all-time closing high on a 15-minute time frame. We tested that month-to-date volume-weighted average price in this market several times since the beginning of the month, and we continue to find buyers there. So if we pull back down to that 132.5 level, that'll give us reason to say, hey, it's slowing down a little bit, and maybe if it was to break, if it would not, because I'm not expecting it to, but if it was to break down and then find resistance, at that level, then perhaps you see a little bit further downside. But there's zero evidence that that is something that's likely to happen. Biotechs continue to move higher. They're up at the top end of this range, just grinding higher. The financials also grinding higher. They kind of have this little flaggish form as well in here. And, things are bullish. It's just the way it looks right now. I mentioned gold because gold is, not only bouncing from the volume weighted average price from the low that we saw in May, but it's also, if we take a look, I'll just draw this in for you. Here's the volume weighted, here's the Fibonacci. So if we take that May low to the August high, you can see that we came right to the 38.2% retracement, which is often
where we find buyers. And we also saw that this week we tested the volume weighted average price from this low here in May. And that's where we're seeing it. Now, it's still below declining 50-day moving average. I don't think it's likely to just rocket higher, but the point that I mentioned for bringing up gold is that if it's to break back below the lows that we saw the last week and a half, be careful with gold because it could continue to move lower. Just be aware of that. I'm not outright bullish on it. I was I put on Twitter this you know the stock Twitter because of a couple things. Twitter, when we look at the daily time frame, clearly it's below the declining 50, the 20, the 200-day moving average. The volume weighted average price off of this peak still heading lower as well. And then if we take a look at a 30-minute time frame and say, people want to buy a bargain, but there are no bargains here in Twitter. Right now, the volume weighted average price from that gap lower, we're still well below we're holding above the volume weighted average price from the low on the 7th, and maybe it's starting to stabilize, but Twitter is still just a garbage stock, very similar to the pot stock, CGC. There's no such thing as down too much. And when you see stocks in downtrends, just stay away from them. They're not of value. You want to stay focused on stocks like Facebook. Facebook, we finally bought this as a swing trade at Alpha Trends today, and we did it after the gap higher settled down and got back above the volume weighted average price right in here. That's a 1-minute chart we're looking at. But on the daily time frame, we finally look like we have tested and held that rising 20-day moving average. We're above the volume weighted average price from this peak and from this low, and those are both together at about 188. So if you have a wide stop in this, I think it would go below that 188 level and what was Monday's lows. But Facebook looks like it's probably another stock that's heading up towards its new all-time highs. Whereas you look at something like Amazon, Amazon's been stuck here, and we'll look at the daily chart. Let's take a look and just show you what's been the problem with Amazon. It's stuck below the volume weighted average price from the peak. And what I can do to just make that a little bit more obvious is to make that red and make it thicker so that we still have net sellers from the peak. Now it's trying to stabilize, but there's no reason to be buying a stock like Amazon. You want to be buying a stock like Google. You want to be buying a stock like Apple, but you don't want to chase them up here. I wouldn't be surprised to see Apple, pull back, let's say, to the volume weighted average price from this move, which when we look at it on a 30-minute time frame, we can see that, a pull back down towards, if you're looking to buy Apple, look at it down towards this 258-ish type of area. Nike finally got going this week. I didn't participate because look how darn choppy it is in there. But, from the daily time frame, it actually kind of acted pretty perfectly in that it found buyers at the volume weighted average price from this prior low. And we have, the prior resistance did hold as support. I never participated, but I don't trade all the stocks I talk about because I don't necessarily, I'm not watching them. They don't suit my personality at that time. Each and every day, I go through about a half dozen or so stocks, very detailed in this video type format on alphatrends.net. And as I've mentioned the last couple of weeks, I currently have a sale for the gold membership. What that includes is daily video at the end of the day, about 2 to 4 minutes, that talks about the S&P 500, the Nasdaq, the Qs, everything I do here on the weekend. And then I have another video that's about 6 to 8 minutes long where I review specific stock trade ideas. Some of those ideas, we're long BX this week. We're looking at HTHT, didn't trigger for us today. We are long Ballard Power from 601. That's been a nice one. And we got long ISRG today. Anyways, take a look at alphatrends.net. And there's a special $5.99 for a year. I promise you it won't be that cheap most likely ever again. I'm going to work with marketing people, and they're telling me I need to raise my prices. So if you've been thinking about Alpha Trends and locking in that $5.99 price, now's a good time to do it. Thanks for tuning in, and have a good weekend.